Hey everyone, if you're listening to this, you're probably already pretty deep in the world of currency markets, right? So we're going to dive into something really interesting today, and that's the euro, the US dollar, and
The euro's potential journey to parity with the dollar.
yeah, exactly.
Journey to parity continues.
Okay, so parity. 1 euro equals 1 US dollar.
Exactly.
That sounds kind of huge.
Pepe.
But before we get ahead of ourselves, what's been happening? The euro hit a 2-year low against the dollar last week, dropping to 1.0222.
Right.
So what's driving this slide?
Well, it's been kind of a downward trend since back in October, and a lot of it boils down to just the different, fortunes of the European and U.S. economies.
Okay.
Europe is wrestling with these soaring energy prices. We're talking a 2-year high for gas,
Wow.
while the U.S. economy seems to be weathering the storm, much better.
So Europe's getting hit hard by these high energy prices, and the U.S. is actually benefiting.
You could say that, yeah.
Yeah.
The U.S. is stepping in as a major gas supplier to Europe right now, which is having a ripple effect on currency markets.
Wow, so that's a pretty big shift in the energy landscape, and it makes me wonder if we could see the U.S. becoming like a dominant energy player on the global stage.
Yeah.
And what would that mean for the balance of power, not just, economically, but politically too?
Yeah, those are excellent questions, and analysts are definitely watching this very, very closely.
For sure.
This energy dynamic is a key factor in the euro's weakness,
Okay.
but it's also part of a much bigger, geopolitical story.
Okay, so we've got this, like economic divergence and now a potential energy power shift. The article also mentions something called the 9-day exponential moving average acting as resistance for the euro.
Yeah.
For those of us who aren't technical analysts, what does that even mean?
Think of it like this. Imagine like a roller coaster, but it's on a downward track. The 9-day EMA is like a barrier
Okay.
that the roller coaster keeps bumping into, unable to break through.
Interesting.
It's a way of visualizing how strong the downward trend is.
Hmm.
And right now, it's suggesting the euro is struggling to gain any upward momentum.
Got it. So the euro keeps hitting this barrier and can't seem to break free.
Right.
Not a good sign if you're rooting for the euro, I guess. So what else should we be looking out for this week? The article mentions a whole bunch of economic events coming up.
Yes, it's a busy week packed with data. On Friday, we have the U.S. non-farm payroll report,
Okay.
which everyone will be watching very closely.
So why is this report so crucial? I mean, is this the make or break moment for the euro?
Well, it could be.
Hmm.
A strong jobs report in the U.S. would likely send the dollar soaring even higher,
Right.
putting even more pressure on the euro.
But on the flip side,
Exactly. A weaker than expected report might give the euro a little bit of breathing room.
okay.
And this is where things get interesting, for you personally.
Okay.
Think about your own situation. Are you planning a trip to Europe anytime soon? Do you have investments tied to the euro?
Oh, okay.
This report could have a direct impact on your wallet.
Okay, that's a great way to connect this to our listeners' lives. So Friday's report is a big one to watch, but what about the rest of the week?
Yeah.
What else is coming up on the calendar?
Well, Monday kicks off with a speech from the Fed's cook and the release of the U.S. S&P Global PMI data, which gives us a snapshot of the health of the manufacturing and services sectors.
Oh.
Then on Tuesday, we'll get the ISM PMI data, another measure of economic activity,
Right.
along with data on U.S. job openings.
So Tuesday's all about the U.S. economy.
Pretty much.
Got it. Now, Wednesday seems like a busy day.
It is. The Fed's Waller is scheduled to speak, and we'll also get the minutes from the Fed's December meeting.
Okay.
And remember, that meeting already spooked the markets a little bit because the Fed hinted they might not be as quick to cut interest rates in 2025 as some had anticipated.
Oh, so the markets are really sensitive to any hints about interest rate moves.
Definitely.
Okay, and then Thursday?
We've got count them three, Fed speakers, Harker, Bowman, and Schmidt.
Wow, a triple header.
But it's not just about the Fed this week.
Oh, right.
We also have German inflation data coming out on Thursday, and that's a big one for the entire Eurozone.
Okay, so lots to watch on Thursday.
Yeah, definitely.
I'm already starting to feel the information overload.
Yeah.
But there's one more element the article throws into the mix that I gotta ask about Donald Trump's return to the White House.
Oh, yeah.
What impact could that have on this whole euro-dollar dynamic?
That's the million-dollar question, isn't it? There's a lot of uncertainty.
Of course.
But analysts are suggesting that Trump's policies could be inflationary, potentially leading to higher interest rates in the U.S.
Okay, inflationary. Hold on. Can we break that down a bit? What kind of policies are we talking about here, and how could they lead to higher inflation?
Well, if we look back at his past actions, pronouncements, things like that.
Right.
We could see things like increased infrastructure spending,
Yeah.
tax cuts aimed at, stimulating the economy, or even protectionist trade policies.
Interesting.
All these things, while intended to boost the U.S. economy, could also have the side effect of pushing inflation higher.
Okay. And higher inflation in the U.S. generally means?
A stronger dollar. Investors want to put their money in currencies where they believe, their returns won't be eaten away by inflation.
Right.
If the U.S. is seen as having this higher inflation risk, they might shift their money out of the euro and into the dollar, which makes the greenback even stronger.
So even if Trump's policies are aimed at, the domestic U.S. economy,
Yeah.
they could have these ripple effects across the globe,
Yeah.
impacting currencies like the euro.
Exactly. It's all connected.
It really is, and that's why understanding these seemingly distant political events
Right.
can be so important for, our own financial decisions.
It's true.
This is fascinating stuff. Before we move on, I want to bring this back to our listeners for a second.
Sure.
What does all this mean for you? We've got a lot of economic data coming out this week, plus the Trump factor looming in the background.
Yeah.
How can you, as a listener, make sense of it all?
Well, I'd say first, don't get overwhelmed.
Good advice.
Focus on the key events we've highlighted. Friday's U.S. jobs report, Thursday's German inflation data, and any pronouncements from the Fed or the White House.
Okay, those are the big ones to watch.
Right.
And what's fascinating to me is that the U.S. becoming a major gas supplier to Europe isn't just about energy.
Right.
It's about, global power dynamics shifting right before our eyes.
Exactly. It highlights how interconnected everything really is.
Yeah.
The energy dynamic, the economic divergence, the potential political impacts.
It all ties back to the euro-dollar exchange rate.
It really does.
I'm already feeling more informed just from this conversation.
Mhm.
But before we wrap up this part of our deep dive,
Yeah.
I have one more question.
Sure.
What would it look like if the euro and the dollar actually reached parity?
Parity means that they would be equal in value.
Okay.
€1 would buy you $1 US. It's kind of a symbolic threshold,
Right?
but it also has real-world implications, which we'll get into after a quick word from our sponsor.
Sounds good.
Stay tuned.
So parity, €1 equals $1 US. It's a psychological barrier, but also has real-world consequences.
Oh, yeah, for sure.
So can you give us some examples?
Absolutely. Imagine you're a European company, right? And you import goods from the U.S.
Okay.
If the euro and the dollar reach parity, those imports suddenly become way more expensive. That cuts into your profits.
Okay.
But then on the flip side, a U.S. company exporting to Europe, they would find their goods becoming more competitive, potentially boosting their sales.
So parity, or even just like the journey towards parity, is a big deal for businesses involved in international trade.
Huge.
What about travelers?
Oh, think about that European vacation we talked about earlier, right?
Yeah.
If that euro weakens to the point of parity with the dollar, your travel budget is going to take a pretty big hit.
Oh, no.
Yeah, your dollar won't stretch as far, making everything from hotels to meals much more expensive.
Ouch. Yeah, that's definitely something to consider for sure.
Definitely.
Okay, so parity has implications for businesses, travelers, and probably investors too.
Oh, absolutely.
Right.
Investors are watching this super closely.
Okay.
A weaker euro could make European assets less attractive to foreign investors, which could potentially impact stock markets and investment flows.
Wow. It's really kind of amazing how a simple exchange rate can have such widespread effects.
Yeah.
It really highlights how interconnected, the global economy is.
Exactly. And that's why it's so important to understand these dynamics.
Yeah.
It's not just numbers on a screen,
Right.
This is about real-world impacts on people's lives, their livelihoods.
Absolutely. And you mentioned earlier that a weaker than expected U.S. jobs report on Friday could give the euro some breathing room.
It could.
But
even if the report is weak, there's still a lot of pressure on the euro, right?
oh, yeah, absolutely. We can't forget about the overall economic outlook for the Eurozone,
Right.
high energy prices, slowing growth,
Right.
and now the potential for political uncertainty with Trump back in the White House. It's a challenging environment for the euro.
Okay, so let's circle back to the Trump factor for a sec.
Yeah.
We know the article suggests that his policies could be, inflationary.
Right.
But what does that actually look like in practice?
Yeah.
What specific policies should we be watching for?
I would say keep an eye out for any announcements regarding, infrastructure projects.
Okay.
Trump has talked about big spending plans in the past.
Right.
And those could boost economic activity, but also fuel inflation.
Okay. So infrastructure spending.
Yeah, tax cuts are another possibility.
All right. If he pushes through those tax cuts aimed at stimulating the economy, that could also contribute to inflationary pressures.
Interesting. So infrastructure spending, tax cuts, anything else?
Trade policy is another one to watch.
Okay.
Trump's been critical of certain trade deals in the past and has even hinted at imposing tariffs or, other protectionist measures.
Right.
And those actions could disrupt global trade flows, potentially leading to higher prices for consumers.
Okay, so we've got infrastructure spending, we've got tax cuts, and trade policy as potential, triggers for inflation.
Right.
And if inflation rises in the U.S., that generally means a stronger dollar.
Right. Investors tend to seek out those currencies where their returns are less likely to be eroded by inflation, right?
Yeah.
If the U.S. is seen as having a higher inflation risk, investors might, shift their money out of the euro and into the dollar, which would further strengthen the greenback.
Okay, so this is where I get a little confused.
Yeah.
If Trump's policies are focused on boosting the U.S. economy, wouldn't that be good for the dollar anyway? Like, why does inflation complicate things?
That's a great question. And it's not as simple as stronger economy equals stronger currency.
Right.
While a robust U.S. economy can certainly support the dollar, uncontrolled inflation can actually be detrimental.
How so?
Well, high inflation erodes purchasing power, making it more expensive for businesses to operate and for consumers to buy goods and services. And this can eventually slow down economic growth, which would make the U.S. economy less attractive to investors in the long run.
So it's kind of a balancing act.
Yeah.
A healthy economy is good for the dollar.
Right.
But too much inflation can actually backfire and hurt the currency's value.
Precisely. And that's why the Fed, the U.S. central bank, plays such a crucial role.
Okay.
Their job is to keep inflation in check while also, supporting economic growth.
Sounds like a tough job.
It is. And it's why the markets hang on, every word the Fed utters.
Right.
Any hint about their plans for interest rates can send shockwaves through the currency markets.
Speaking of the Fed, the article mentions that their December meeting already kind of spooked the markets a bit.
Yeah.
Because they hinted that they might not be as quick to cut interest rates in 2025 as some had expected.
Right.
Can you explain why that's such a big deal?
Sure. When interest rates are low, it can make a currency less attractive to investors because they can earn better returns elsewhere.
Right.
So if the Fed is signaling they're going to keep interest rates low for longer than anticipated, it can weaken the dollar.
But wouldn't lower interest rates also, stimulate the U.S. economy, which could in turn strengthen the dollar?
It's a complex interplay of factors. Lower interest rates can definitely stimulate economic activity, but they can also lead to inflation if they're not carefully managed.
So it's all about finding that right balance.
Exactly.
Okay, so we've got the Trump factor, the Fed's interest rate decisions, the contrasting economic outlooks for the U.S. and Eurozone, and now this whole energy dynamic with the U.S. becoming a major gas supplier to Europe.
It's a lot.
Yeah, it is.
Yeah.
It's a lot to process.
Yeah.
Any advice for our listener on how to make sense of it all?
Here's what I'd suggest.
Yeah.
First, focus on those key events we've highlighted.
Right.
Pay attention to the U.S. jobs report on Friday, the German inflation data on Thursday, and any big announcements from the Fed or the White House regarding economic policy.
Okay, so those are the big ticket items.
Yeah, exactly. Think about your own personal context.
Right.
Are you planning a trip to Europe anytime soon? Do you have investments in European assets? The movements of the euro and the dollar can have a very direct impact on your financial life.
So it's about connecting these global events to your own personal situation.
Exactly. And it's about understanding how these, seemingly distant economic and political forces can actually hit pretty close to home.
Absolutely.
Yeah.
This has been incredibly insightful. I'm already starting to see the world of currency markets in a whole new light.
That's great.
But before we wrap up, I have one more question for you. We've talked about the potential for the euro to reach parity with the dollar.
Right.
But what if it goes even further? What if the euro actually falls below parity? What would that mean?
That's a fantastic question.
Yeah.
And it's one that analysts are starting to consider pretty seriously.
Wow.
If the euro were to fall below parity, it would be a major psychological blow, And it would signal a pretty significant shift in the balance of power between the two currencies.
Right.
But before we delve into the potential consequences of that scenario,
Yeah.
let's take a quick moment to recap what we've learned so far.
All right, so let's recap what we've talked about so far. The euro sliding against the dollar, the different economic pictures in Europe and the U.S., and of course the Trump factor.
Yeah, a lot going on.
We even talked about what it would mean for those two currencies to reach parity. 1 euro equals 1 U.S. dollar.
Right.
But now you've raised the stakes even higher. What if the euro actually falls below parity with the dollar?
Well, it's something that's becoming, increasingly plausible. Wow.
And it would definitely have some pretty significant ramifications. I mean, for starters, it'd be a big psychological blow to the euro. Remember, currencies aren't just, units of exchange. They also kind of reflect market confidence in an economy.
Right.
So a euro falling below parity with the dollar would be a sign of, serious loss of faith in the Eurozone's economic prospects.
And this wouldn't just be about perception, right? There would be actual real-world consequences.
Oh, absolutely. European companies that rely on imported goods, especially from the U.S., would be facing even higher costs, which would squeeze their profit margins even more.
Right.
This could lead to, job losses and even further economic slowdown in the Eurozone.
And on the flip side, U.S. companies exporting to Europe would be, loving this, right? Pretty much their products would become even more competitive.
Exactly.
In price-sensitive European markets.
Yeah, we could see a big surge in U.S. exports to Europe, which could boost the U.S. economy and, potentially create jobs. But it's not all, sunshine and roses for the U.S., right?
Well, yeah, I mean, a much weaker euro could also make European vacations more attractive to, American travelers,
Right.
leading to a surge in tourism, which could potentially put a strain on European infrastructure and resources.
So it's kind of a mixed bag.
It is.
With both winners and losers on both sides of the Atlantic.
Yeah, and that's kind of the nature of currency fluctuations, right? They create these opportunities for some, but also challenges for others.
Right. And it's not just trade and tourism we're talking about here, right?
No, definitely not.
A weaker euro could also impact, investment flows.
Absolutely.
Like foreign investors might avoid euro-denominated assets.
Right. Seeking out better returns in dollar-backed investments, which could put downward pressure on European stock markets and also make it harder for European companies to raise capital.
So a euro falling below parity would have all these, far-reaching consequences impacting everything from business costs to travel plans to investment decisions.
Right.
So what does this all mean for our listeners?
Yeah.
What should they be watching for, as we head into this potentially turbulent week?
Here's the thing. Nobody has a crystal ball, right?
Right.
We can't say for sure what'll happen with this whole euro-dollar exchange rate. But if you understand the key factors involved, the data releases, what the Fed's doing, and the potential impact of Trump's policies, you can make more informed decisions about, your own finances.
Okay, so it's about staying informed.
Right.
Paying attention to the news, and kind of connecting the dots between these global events and our own personal situations.
Exactly. Knowledge is power, especially in a world like today's that's so fast-paced and interconnected.
Couldn't agree more. Well, I think that brings us to the end of our deep dive into this fascinating and sometimes confusing world of the euro and the dollar.
It's been a pleasure exploring this topic with you.
Likewise. And a huge thank you to our listeners for joining us on this journey.
Yeah, thanks for listening, everybody.
And remember, this world of finance is always evolving, so keep being curious, keep learning, and never be afraid to ask those questions. Until next time, keep exploring.